All right. So we talk a lot about these hyperscalers issuing these bonds to build these facilities. And then we also talk about the fact that in some of these deals, there's no assurances. Talk to me about what you're getting from these hyperscalers, other tech companies, and the build-outs of their facilities. How are they paying for it? How assured are you that you're going to get paid?
Well, they're making long-term investments, Frank. And so the way we see it at Jacobs is we're the engineer and the consultant as they're planning, site selecting, designing now very complex. I mean, these data centers now are going from what traditionally was a 50 to 150 megawatt data center up to 700 megawatts and above, with the ability to handle now the AI loads and the compute loads that go along with it. That pipeline has not stopped. Just in the last 2 quarters, we've seen our own pipeline grow by 5 times. And those capital projects are going through. They're ordering equipment. We're doing designs. We're site selecting these sites, these facilities, and we're in real time. So we have not seen a slowdown at all.
So a lot of people are worried about a bubble, the fact that the build-out might be getting to be too much. They might be overbuilding. But you're saying the companies themselves, they don't share that opinion anyway. We do hear that from the earnings calls. But obviously, you have kind of your finger on the pulse of what they're really thinking. So these facilities, are they going to continue to be built out? Are they getting even bigger? Because obviously, the demands are only going to get bigger, at least on paper from where we sit right now.
They are getting bigger. Frank, I think the real unique thing here is that where does capacity sit right now in the data storage world? And the data storage world is at capacity. If this was built it in anticipation that data needs were going to grow moving forward, but there still was quite a bit of capacity, it'd be different. That's not the case. And so if you look at not just the electrical OEMs, but how we're designing it and how these are being deployed all around the country, it's a big deal.
One more build-out to talk to you about, because we're just talking about Lilly hitting that $1 trillion club. The GLP-1 build-out. Now, you have your hand in that. Where is that at right now? We're hearing a lot of talk about healthcare and the administration, reshoring, but also making things cheaper. Is that impacting the build-out of those facilities and the drug makers' willingness to ramp up production of that?
It's not. It's not. So GLP-1s right now, I'd say, are kind of in the injectable form, probably middle innings if you're a baseball fan. But now we're going into new entrants into the market, so just not Lilly and Novo, but other companies that are coming with their molecule. And then the second is new forms of delivery, meaning tableting form. And so that's creating another kind of wave of capacity and capital build-out.
Different facilities, or do they do both in the same facility?
Different facilities.
Okay. So, all right, so obviously that's a big tailwind for your business.
It is.
All right, I got to go back to your earnings, though, a couple of days ago.
Yep.
Strong earnings, but one of the things that investors seem to flag was the effective tax rate for the last fiscal year. It jumped up to almost 40%. The previous year before that was just under 17%. And then you see you have a one-time tax event in this fiscal year. Everybody thought that the Trump tax and spending bill is supposed to reduce corporate taxes. Why are yours going up?
So some of those. So first of all, the Trump tax policy is still taking some time to implement. So we haven't quite seen the full effect of that. I think in 26 and beyond, we'll start to see some early elements of that. So some of that volatility with R&D tax credits and how international taxes, about 40% of our business is outside the U.S. as well. So all of that's playing out. So we kind of see more of a smoother run rate with regards to taxes in the coming year.
Okay.
Part of it is as a result of that bill.
All right. Last question. Quantum build-out. What is that? Is that different from the AI build-out? I mean, are they separate things? Announcement that you're part of a build-out of a quantum facility. What's the difference? I would imagine that it involves AI chips and data centers and everything else. What's different between that and the AI build-out?
It is. It's the synthesis of even more complex energy usage around the next form of computing. So think AI data centers, and then if there's a next phase of that, we would be in the quantum
But what's the difference? Are they bigger? They need more energy? They're
more complex. They're more complex, and the energy needs are about the same.
So are the same companies building these facilities? I know right now you're working with a company outside the hyperscalers, but are you expecting the hyperscalers to build those facilities as well?
I think the next wave, at least the technology, so the facilities that we're in the middle of, Frank, these are more on the R&D side. So there's a bit of development that still needs to happen before you can get to full quantum computing. So right now the focus is on the AI data center infrastructure that we're seeing, not just here in the U.S., but also abroad.
I was just talking about a B of A note about growth in the U.S. next year. B of A has it at just under 2.5%, 2.4%.
Right.
A lot of that is obviously being attributed to the AI build out and some of that. Just talk to me about the rest of the landscape out there. Outside of GLP-1s and AI, are we seeing tailwinds for other domestic reshoring, other domestic construction?
We are. So let me separate it into two parts. One, just staying with advanced manufacturing. The life sciences world has been dominated by the GLP-1 discussion. There's quite a bit of other elements of that growth. We're seeing oncology growth. We're seeing growth in other cancer therapies, and so life sciences has got some really nice tailwinds behind it. But then the infrastructure spend, IIJA, and all that was being incentivized within the infrastructure world around water, transportation, energy, and power needs for urbanization. So that has really been driving the business as well, in a good way.